Hello traders, the title of the video is Elliott with a trader situates the financial markets using the Elliott wave principle. Alright, so the question we are asking is, where is the financial market now? So you call yourself Elliott wave guru or Elliott wave analyst, Elliott wave expert, Elliott wave trader, Elliott wave student, Elliott wave beginner, all right? Would you mind to answer the question, where is the market now, the financial market now? Now, most professional traders, most Elliott wave experts will tell you where is the market now if you ask them, all right? In this tutorial, okay, I will also tell you where is the financial market now. Good. The financial market is in a third Elliott wave of a higher degree, all right, waiting for the fourth wave of a higher degree. Very simple. That's it. That's where we are now. So you may say to me, Joe, what is this chart? Well, this chart is Verizon Communications, a peak VZ. And this is a very interesting chart in comparison to other charts. Now, talking about where is the financial market now, I said that we are in a third wave, and we are expecting a fourth wave. Yes or no? I did. All right. But talking about Elliott wave trader situates the financial market using the Elliott wave principle, there are more that we can say. Okay, there's more that we can say today about the market apart from the third wave expectation of the fourth wave of a higher degree. What we can say more situating the financial market is that the financial market, generally speaking, most stock, whether you are India, a trader was asking me, George, how about Sensex? How about Nifty? I do not have data for those, and I do apologize to our YouTubers that are in different parts of the world. I have data for American stock, American indices, all right, and also for currencies. I can only work with what I got, and it costs me money to do that. And I say to traders, all right, if you go to our website, you donate to our website. If you have enough funds, all right, we will go and pay for those services so we can have access to all this data. All right, then we can talk about other financial issues. So this is just in bracket. So the financial market in general, whether you're in India or whatever, in Europe, all right, from the 80s, so to be 1984, 85, the market was going up. Most stock, especially the technology stock, went up, and all right, in 2000, that trending phase has ended. So if you look at, in any country, you will see that most stock from the 80s to the 2000, they were trending up. So that trending phase, in most cases, all right, talking about the financial markets, all right, that is the first wave. And then from 2000 up to 2009, there was no action at all, no trend. It's all correction. That's another reference, but nothing has happened. Now, there was a commodity. I mean, some stock went up from 2003 or up to 2008. That's it. I'm giving you the broader picture. So don't get too specific. I'm giving you the broader picture situating the market, okay, from the broader view. All right, not the narrow view, but the broader view. All right. So, in fact, from 2000 to 2009, most stock were in corrective phase. Blah blah blah. Either you see X wave, or WS wave, or WSY wave, all kind of messy corrective wave. So I'm situating the market, talking about major financial market, what is happening. Then from 2009, most financial market, okay, has started, okay, the third Elliott wave. So for most stock, 2009 is the is corresponding. I'm choosing my word carefully so you do not take everything like it's true all over the place. All right. 2009 is the end of the corrective phase that started in 2000, all right, and then in 2009 we see the beginning of the third wave of a higher degree for most financial instruments. If I go now check many financial instruments, you'll see that that's what they were doing, all right. So if you look at Visa, yeah, okay, 2009, you see here, trading first, third wave. Especially if you go on the yearly chart, you see it clearly. United Health, 1, 2, third wave. Okay, you look at NASDAQ 100, third wave, waiting for the fourth wave. You look at, all right, S&P 500, you look at, all right, Dow Jones, FTSE 100, major stock in this. And for those of you that are talking about Sensex, you see similar picture. This is situating the market itself. But we can't situate the market, all right, by putting everything in one group. So the broader view is that many stocks today are in a third wave and they are waiting for the fourth wave. But there is another group. The margin, you remember? The margin, all right? Those on the side, all right? The error zones. So this is one example here. That's why I brought this chart. I pull it out. All right? Verizon, beautiful name. Wow, Verizon. If you get tired, you pronounce that name. That can cool you down a bit. Verizon, Verizon. Now this will make you laugh a bit. It's a nice name, to be honest. So Verizon is also highlighting something different, a little bit different. You can see that Verizon stock from 2009, we didn't see a new trend. You see, it's stuck below the trend that was supporting the prior trend. You see, this is what I call the primary trend of the wave one. It's stuck below. You see here, resistance only. Try to go above resistance, denial, suppression. They are suppressing it along that bullish trend line that was supporting the first wave. So you will come across some stock that from 2009 that did not complete their third wave. We didn't see a clear-cut third wave. What is happening? So the broader view, I talked about it already, all right, third wave, they are expecting the fourth wave. There is another group, which is this one now. You don't want to ignore them. They couldn't complete the third wave. Few stock, some of the stock were lagging. They took a lot of time. So they are behind, all right? They are behind, okay? If those stocks are not defensive stock, I'm talking about stock like a Verizon, if they are not defensive stock, what is likely to take place is that when the fourth wave, the market itself is starting the fourth wave, those stocks that are due for normal third wave, for many reasons, are lagging in comparison to the general market, may suffer a little bit. Now, sometimes they may say, Joe, you are evil, you are telling people to sell Verizon. I never said to anybody to sell Verizon. I never said to anybody to sell this stock. This video is for educational purposes. What I'm saying to you, the fundamental may be solid for those stock, what I'm calling marginal stock. They are not marginal talking about the business itself, but I'm talking about comparing them to the broader view. The broader view is that most stock are in the third wave, like I told you, Visa, okay, United Health, they are completing their third wave, all right? But some stock are behind. So that's what I'm calling marginal. So they are behind, which means they can complete their third wave later. But they are also risking the fact that if the broader market, financial market, start to print out the fourth wave, the bearish sentiment may negate, all right, that, growing a third wave that's supposed to be completed. So we need to understand what is happening in the financial market. So to summarize this video, talking about area where traders situate the financial market using the area wave principle, is that there is one group of stock, the broader view, that are now in the third wave, especially the fourth wave. And there is another group of stock that are struggling to complete that third wave. Those stock, if the fourth wave is underway for the broader market, that can cancel, for instance, if we call it this here, first manual wave, all right, for instance, I'm not counting wave now. I'm just saying, for instance, I'm not saying this is the first wave. See, for instance, if you call this the first wave, okay, and we are expecting, all right, first, if we are calling this first manual wave of the third wave of a higher degree, all right, if the broader market start pulling back during the fourth wave, this supposed to be first manual wave or the third wave can be cancelled. So we have two groups of stock, and the second group are behind, and they are on the edge, so to speak. So this is it. So when you open a chart, all right, I'll open one now. Hold on, please. I'll bring on now Microsoft. Microsoft was behind in comparison to other stock, and then it picked up gently. It struggled a bit at the beginning here, was struggling to complete the fifth wave, and then it started running now, it catch up. It did that. But at the beginning, it was slow. It was slow. People wondering. You see, 2013, 2014, no one know whether there will be a trend or not. You see? And then from 2014, in 4 years, it just ran, completed. So now looking at Verizon, on the other hand, it's still struggling. Now, I was telling you that if it's not a defensive stock, the fourth wave of the broader market may impact on this stock. But it doesn't mean that definitely some stock cannot go up when the market is pulling back. You will see that sometimes some stock will just ignore what is happening and then keep going up. But those stocks, we need to understand, situating the market, that they are in a danger, that their growing third wave may be delayed, slowed down, or retarded. Is that something we can say? So understand. So when you're looking at a chart, you can classify quickly where is this stock. This one belongs to the broader market, and then you click on another one. Where is it? You can just quickly spot and say, all right, this one belongs to this one. This one belongs to the second group. This one belongs to the second group. Where is it now? Is it in the third wave of a higher degree? The broader market. This is how the analyst will analyze the market, and then you can create a group of those stocks and say, if, you know what can happen? If the fourth wave for the broader market is completed, and now the fifth wave, all right, of the broader market is beginning, those lagging stock can also benefit from that, and they can run very, very fast. So it's like you are running, all right, and somebody is behind, and then this person, for one reason, got more energy suddenly, which will the market becoming bullish about it. They know that they're behind, and now the bullish investor know that, okay, this one is behind. I don't want to buy stock in the fifth wave. I will prefer to buy one that is still struggling during the third wave, because they are still cheap. So they go and blow those stocks, and you will see that those stocks will start running very fast to catch up with those that were ahead. All right, normally I should charge you for this information. You see, this is one, this is a Verizon, you see. So, all right, where are we? Where are we going? Are we in the third? And on the other hand, okay, talking about the marginal stock, all right, we were talking about most stock are in the third wave, broader market in the third wave. So I talked about stock that are behind. There is another group of stock that are also ahead. All right, some stock are in the fifth wave in comparison to the broader market. They are also marginal stock. So we are situating the market, grouping stocks for different strategy. So how can we use those that are ahead? Stock that are ahead, we can use them as a leading indicator. So we look at their price structure and say, this one is well ahead. No question about it. All right, let's see what kind of correction they are printing. And then we can use their price structure to guide us as a reference point, okay, to have a bit of idea what kind of correction can take place with the broader market when the broader market catch up with them, because some stocks are ahead of the broader market. But there are only few of those stocks that are already in the fifth wave in comparison to the broader market. But we also know that there is another group of stocks that are behind, like I'm showing you now, Verizon stock. Is that something you can work with? You can see Verizon is stuck below. That's a bullish trend line. And they are not allowing it to go above it at all for now. But is this the first minor wave, or is it the second wave developing here? Will it survive the heat of the fourth wave? But if the fourth wave of the broader market is quite shallow, it's not too, or it's fast, sometimes, you know what's happening? This is a very important point I need to mention now. Sometimes, because of the hedge funds, all right, the big institution, they know now that we are expecting a fourth wave, all right? Sometimes, if they don't want it to take long, because they know that if the fourth wave take a bit longer going down, the market sentiment will become bearish. People will, everybody say, 2008, I better get out before it's too late. And then they panic, everybody starts selling. And then what will happen is that they will destroy the bullish trend. So that is a concern for the big market players. So sometimes what's happening is that the fourth wave, instead of allowing it to take a year or more, it will be swift, which means the price will go very fast, something like this, very fast. In a short period of time, it will complete the fourth wave, and that's the end of it. So the bearish traders do not have a long time to damage the bullish sentiment. And then the fifth wave will begin. So everybody look at the chart and say, well, it's done. The fourth wave is completed now. And then what people are thinking, they want to buy, isn't it? They want to buy. So be aware that the fourth wave sometimes can be fast, can be swift, all right, can be shallow, but the concern for the, all right, the major player is that it doesn't spoil, okay? That's why it's usually shallow, because they don't want to destroy the trend. They are still in place. So when people are selling during the fourth wave, the leading market players are watching, because if the bearish traders become very wide, they start doing all kind of crazy things, they get drunk, and then the market sentiment become bearish, and then the trend will fail big time. And no one wants that. So be aware of the market sentiment, talking about expectation of the fourth wave, what is likely to take place. So this will conclude our discussion today about Elliott wave trader situates the financial market using the Elliott wave principle. To summarize the video, we may say that we have two groups of financial instruments. The broader view for the financial market is that the broader market is in the third Elliott wave and is expecting, okay, anotherly a fourth wave. All right. But however, there are other stocks that are lagging, they are behind, which means they haven't completed their third wave. They are still struggling to complete their third wave. This is the second group that we are calling the marginal financial instrument, not because of the business that they are doing, but because they are lagging in comparison to, okay, the general market. But among those marginal financial instruments, there is another group that is far ahead. They are in fact in a corrective phase. They have completed their 5 waves of a higher degree, and they're in a corrective way. Those stocks that are also belonging to the marginal group, we can use them as a leading indicator to have a bit of idea what kind of a corrective pattern may appear when the market finally one day, okay, completes, all right, the 5th wave. At the end of the day, we shouldn't forget that when we are talking about Elliott wave count, it's just a guide, all right? It's not an exact science, but it's powerful tool that help us to have a bit of idea what is likely to take place. At the end of the day, the price is the number one indicator. If the price continue to go up, it will stay above a rising trend line and will stay within, okay, a rising channel, all right? I hope this video has been useful to you and will help you to become a better Elliott wave trader. If this video has been totally useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. If it is an essential tutorial that can help other traders, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. If you have not yet subscribed to our channel, please subscribe to our channel today. It's free. Our channel is 24 Elliott Waves YouTube channel. DG2, DG4, Elliott Waves is plural, YouTube channel. Our Facebook page is Stochastic Mahdi Facebook page. Alright? Subscribe to our channel. Be sure to click on the notification bell because we are live streaming most of our video. We are live streaming our video. So you want to know, receive the notification to know exactly when the next live streaming will take place. So this will conclude our discussion today about Elliott Wave trader situates the financial market using the Elliott Wave principle. For those of you who are interested in high probability trading setup, at the first step, okay, for the trading trade, one must transfer a high probability trading setup that will generate a reliable trading signal before one can enter even the trade. If you are interested in high probability trading setup, I highly recommend the Trade Idea software. The link is in the description section. Alright, check the link in the description section. Don't Google it, just check the link below. Happy trading to you all, and I will speak to you soon. Thank you for watching.